What's up, guys? Welcome back. This is going to be another Forex League market review from the previous week. So just a quick summary as to what this actually is. It's kind of the second part to the Sunday Market Blitz. So at the beginning of each week, every Sunday, we'll mark up all the analyses and all the assets that we're looking to trade. We'll present it to you guys on the Sunday Market Blitz, which is 8 p.m. Eastern Standard Time every single Sunday. And then at the end of the week, we'll review how we did. Relook over all of these analyses, take a look at the different trade scenarios, and see which played out. Kind of makes sense of the past week. Look at the overall accuracy and so on. So that's what this is, the review. So let's jump right into it. Grab DXY to start and see how this played out according to last week's analysis. Okay, so we saw that we were breaking above the 100 level. We had established a very clear high here, and now we were just waiting for structure. Very simply, right? We wanted to see a higher low if this was going to continue up with good bullish setups, and then just a continuation to the upside. All the higher time frame trends are very bullish, so this was the most likely, right? Everything is kind of pointing this way. It's very high probability that we'll continue to see the dollar rally. To what extent, we don't know yet. Ideally, though, again, we want to see structure closer to 100.5, and then boom, there's a continuation from there. Okay, so that's the long scenario. Again, the most likely. However, if we were to consider DXY more bearish, we're looking for pretty much structure below the support level, 100.5. So that means price action moves below it, retest gives us a lower high, and then starts to look more bearish. Okay, now if that happened, if we followed trade scenario 2, we would then reanalyze once we got to the support level, and then come up with 2 new trade scenarios. So let's play this forward, see how this week actually played out. Okay, so we didn't get structure, it didn't pull back as deep as we wanted to. However, the bias was definitely right. This thing just kept rallying straight into this 103 and a little bit higher. So we actually got closer to 104. And now we're seeing a bit of what looks like a reversal pattern. So we'll have new analyses for this week and present it to you tonight, actually, on the Sunday Market Blitz. So this is going to be interesting to reanalyze. But overall, technically, the analysis was right. We're looking bullish. And it did exactly that. So there's DXY. So we know how that's kind of going to set the pace for the rest of these. Because again, guys, once the dollar is really moving, you'll see that kind of impact the rest of the market. Okay, the dollar makes up for 80% of all trade, especially on all USD pairs. You're going to see huge fluctuations, a lot of volume. So let's jump over to AU, which actually shares an inverse correlation with DXY. So if the dollar is going up, we'll typically see AU falling to a degree. But let's go ahead and grab the analysis here. Okay, we were very bullish. Okay, we had a higher low established here, and this became a pretty key zone, 0.747. Okay, and once we broke that, we were looking more bearish. This was that 4-hour transition. Break of these higher lows, we got a lower high, a pattern, broke support, retested, and dumped from there. So we're definitely bearish here on the 4-hour. We did notice that 0.725 is kind of the key zone. How price action reacts here is going to really determine where we're going for the week ahead, which zones we're looking at, and what we're considering. So it is super bearish. Ideally, we knew that it could pull back, touch 0.74 again, and then maybe we'll look for shorts from there. But based on the amount of volume and the lack of reaction, just on what we were able to see, the other likely scenario is that we'll break through 0.725, push lower, get a lower high, some sort of structure below this support level would be perfect, and then a continuation to the downside. So let's see how this played out. But that is a lot of volume. Definitely need a strong reaction to stop a trend like that, right? And we didn't get that here at 0.725. Again, it blew right through it, retested, and it looked like it's consolidating. So it slowed down a little bit. This momentum kind of slowed down, which is where we're at now. Right, we're just kind of consolidating, but yet still pushing lower. We're going to have to reanalyze this, and then come up with new scenarios for the week ahead. This is definitely in a better area. You want to see consolidation after a large amount of volume, because then that's where trade opportunities are going to present themselves. Now we're still a little early on any scenarios going into this week, but I could tell that there's going to be some good setups. Very easy to see what we need to happen to get into trades going forward. But overall, this bias was right as well. We're expecting, excuse me, a bearish AU, and that's what we saw. So it looks like currently we're heading down towards the 0.7 level, which is going to be our next key zone. So keep an eye on AU. But that played out as well. Technically, both biases were right on DXY and AU so far. But here we are on AJ. So the thing with AJ is it's super overextended on the daily time frame. So we're here on the 4-hour here, and this is kind of representing a slowing of price action. This has been super, super bullish up to this point, and now this has kind of been the slowing of price action. It's starting to, we're starting to see more bearish candles, lack of bulls, and this was kind of the last attempt here from the bulls up to the 95 level. We got a nice little double top. Price action came back down. So we really wanted to see how price action reacted at 92.85 this past week. Either it's going to bounce from there and we'll see reactions kind of confirming this level as support once again, or we're going to break below, in which case it's very likely that we'll hit 91 support before seeing reactions. So, I mean, this has kind of been at the bottom of my watch list for the past few weeks, just because, again, super overextended. So I've been super patient, waiting for the right things. Just want to see the right setups here on AJ before, pulling the trigger. So let's play it forward and see what happened. So it did exactly like we thought. It followed the blue trade path, which is scenario 1, the most likely. It fell right to 91. Then it kind of bounced from there. We saw a little bit of consolidation, a little bit of transition, pushed up, and now it looks like it's gonna pretty much assume the range. That's what it's looking like right now. It's gonna bounce between 91 support, 92.85 resistance. I'll have to reanalyze before I can make a better judgment call on this. But I mean, it did follow trade scenario 1, right? The bias was there, it pushed lower, we hit support. We'll see if this has momentum to continue bearish and actually break 91 for this next week. We'll see, but yeah, AJ it worked out. Again, the bias was there. So let's jump over to UJ. And this one's tricky because we are a little overextended on the daily. However, the 4-hour shows to be moving pretty well, right? There's a nice 4-hour trend here. You guys can see this bullish channel. Super, super steady. So going into this week, we're expecting either this channel to continue, which is very simply just, more bullish movement coming off this area, or we were starting to look for a transition on the 4-hour, which would mean a break of this higher low, a nice lower high below 127.7, and then we could start looking at shorts on some bearish candle setups. So these were the ideas for the week, but let's see how it played out. Okay, so it came back down. We tested 127.7, failed to break. So this is actually a fake out right here, and then we just rallied from there into 131, which perfectly tapped our negative 27% fib level, which is interesting. Look at that wick right there, and now it's coming back. So I'm going to have to reanalyze this. It did go with trade path 1. It took a little bit longer than we would have thought, but it continued bullish, which is what the original bias was, right? We're just trying to ride the trend. So this was interesting that it did play out. And again, we'll reanalyze this, or I'll reanalyze this one tonight and present it to you guys with 2 new ideas, right? But I can tell you right now, it's probably looking more bullish than anything else. But we'll take a look tonight when we reanalyze that. But yeah, so far we've been pretty accurate. I mean, tough entries on a lot of these, like AU kind of just took off, AJ just kind of sank, and UJ had a bit of a fake out. But if you were able to catch some entries, there would have been some small windows of opportunity on a couple of these, but I mean the bias was there, so it definitely continued where we thought they would so far. Let's jump over to EJ as our second to last pair and see what EJ did this past week. So on Sunday, this was the analysis done. We were very bullish. We had seen that we got to a new high here, and we were assuming some sort of reversal pattern, it looks like. Ideally, we wanted to see structure closer to 137. Nice reactions off that level, giving us confidence in going long. So that was the bullish scenario. Obviously, in trend, very favorable. High probability, that would be nice. But if we broke 137 with a lower high below, that would be enough for us to consider EJ more bearish. And then maybe we could start considering shorts if the risk reward and structure's all there. So let's see how this played out. Okay, this went with trade scenario 2 actually. So it started reversing. It tanked from these levels up here, 139. Blew right through 137. Kind of a flicker of price action there for a second. Small reaction. Then we got that engulfing, and it just tanked from there right to 135.5. Got a nice little double bottom, pulled right back. Now we're resting at 137 again. So it went with trade scenario 2. Technically, we did get to the level we thought it would. But this is good this week because now it makes it super easy for us to analyze and see what we want to see in order to get into a trade. The fact that we're at a key level is pretty good. We're either going to break above or reject from it. And, we'll see more of that in this week's analysis again. So trade scenario 2 on this one, on EJ. It fell back a little bit lower. All right, let's jump over to gold as the last asset that we're going to review here and see what gold's been doing. So the best place to start here is to just look left a little bit. Let's look into the past. We can see that we've been consolidating quite a bit between these two levels, 1948. Well, this should be 1950 area, but 1950, 1930. Tons and tons of consolidation, lots of ranging in there, right? So once we broke above, got the higher low, we're bullish. We didn't quite get to the high that we wanted to, which would have been the 2000 level. Instead, we got to about 1998, very, very close, and then it reversed from there. So on this reversal, we're expecting reactions from 1950, total lack thereof. We got a little bit of consolidation, then it broke back into the range. So with this, it was very likely that we're going to continue with the range, right? It's going to continue ranging, or it's going to just keep pushing lower down towards this support level, 1917 at least. Right? Oh, I'm sorry, 1930 is the key zone. This is the range, 1918, 1948. I don't know why there's no label there. There should be. But anyway, so that was the most likely, is that we'll hit 1918, and then we'll reanalyze, consider if it's going to break or bounce from there. Now, if we were to consider this more bullish, very simply, we need a higher low back above 1950. So it means price action pushes up somewhere in this area, pulls back, gives us the higher low, then follows through, and that's where we'd be interested in entering long. Okay, so let's see how this played out. Very bearish, though. So yeah, that bearish trend continued. This was, it went with this trade scenario 1, with the bearish idea. So it tanked from there, sunk straight to 1918, and then blew through that level, dropped straight down to 1870, and now it's pulling back. So this is actually really good. This is a good area for a lower high. This is a little bit too much volume. I'd like to see a little more consolidation going into this week, and then boom, we get the conviction to enter short. But yeah, I mean, it went with trade scenario 1. It definitely blew the expectations, right? It went straight through the range, and then straight to support at 1870. But interesting stuff. So this will be pretty clear as to what we need to see to get into some trades this week. So this is going to be exciting to present to you guys on the Sunday Market Blitz. But until then, this is a review for this past week, and we're all done. Most of them played out pretty well. Most this week went with trade scenario 1, kind of just sustained the overall trends that were already present, and then a couple kind of went opposite on us. So like EJ went with trade scenario 2. But yeah, not a bad week overall, guys. So same thing this week. We'll be dropping the Sunday Market Blitz every single Sunday, 8 p.m. Eastern Standard Time. So if you guys want to see part 1 of this, essentially, join in, check out the ideas, join the Blitz, and start the week with us. Okay, guys, but yeah, another good analysis. Take care, guys. Peace.